What does it really mean when they have to have loans from the Fed? And what does it say about the safety of the system as a whole that encompasses what, 18 trillion in deposits?
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Thank you for joining in our show, as always, where each Tuesday we get an update from the front lines of the physical level of the silver market from the retail perspective, as Andy Schectman of Miles Franklin joins me each week to shed some light on what's going on there, which sometimes is in coordination with the physical or the futures pricing and the paper markets, sometimes completely divergent, but that's why we have Andy on. Well, one of the reasons why we have Andy on. Andy, you're certainly one of my more popular guests, and I know a lot of people love hearing from you, and always a pleasure for me to check in with you each Tuesday. And it was nice today. We got to talk about a whole bunch of things before digging into the silver market as well. So welcome back, and how is everything going today?
Chris, there's no one that I'd rather talk to off air than you. You are a world of wisdom, kind of like an old soul, and it's always my privilege to be here. And thanks for having me and the kind words. I appreciate it very much.
Well, I appreciate that. Actually, it's interesting. I did have a session with a healer once who told me I'm an old soul who's incarnated many times and hopefully learned something along the way. And I guess we'll see one of those days. But
I've always felt you were wise beyond your years. I mean, I'm not just saying that to kiss your ass, although I would if it helped, but that I'm not saying that for that reason. And you know what I'm talking about. All of the conversations we've had that go way beyond economics and precious metals that I think people would kind of get a kick out of if they could be a fly on the wall, led me to believe that you see things in a way that a lot of people don't, and I think that's why you, as quickly as you did, rose to the level of prominence and respect in this industry. And you know, it's like I said, it's just a pleasure to be associated with you and what you're doing, and wouldn't give it up for the world. So thanks for having me.
well, that's kind of you to say that. And I don't know. I mean, I think the whole silver thing in general, I mean, I think it almost has to tie into life because when you think about why we're buying silver, it's because of some of the things we've seen building for years, decades in many cases for many of us. And obviously, it's in fact that might be before we dig into premiums and all that sort of thing. That might be a good thing to run by you that I know perhaps a lot of other people deal with, maybe some struggle with. I know I struggle with it at times where it's like you're not rooting for bad things in the world. It's like now that we've purchased silver and we've gotten excited about silver, and you see some of the events that would seemingly lead to an environment where silver perhaps used more as money or just whether it's a store of value or whatever one wants to call it. Any thoughts on how you handle that, where there's a little bit of the, is the dollar going to be maintaining a solid role, or are the banks running into trouble, which now we've seen they have? Perhaps we could start on your thoughts on that and how you deal with that, and because I find it can be heavy, certainly many times.
It is heavy, and it kind of is a bummer. There's a fine line between pessimism and realism. Most people have a defense mechanism that won't allow them to go down the road that we have, for whatever reason that we have gone down this road. And you know, one of the things that makes it difficult, to even be successful in this industry is that it comes at the expense of people around us, and the things that we talk about are not conventional, nor are they considered popular. And you know, and it goes back to the reason why they say there's no bull market like a metals bull market, because when you're making money, and look at silver squeeze as an example. Silver squeeze, it was a whole different mentality. People were excited. They were going to get the silver market. They were going to squeeze the commercial banks. They were going to do what they did to AMC and GameStop. They were going to make a fortune. It was exciting, and you're going to make money, and you're going to buy a new Corvette and whatever it is. You know, that's one thing, and that's what the equity markets are, and what the precious metals market is the antithesis of that. It is the fact that fear is a much greater motivator than is greed. And when people are scared, obviously their motivations are far greater in terms of acceleration of action than on the other side. And but by the same token, when people are not really accustomed to looking at the other side of the coin and you speak to it, a lot of people would say, oh, he's talking his book, as an example. They would throw that out rather than acknowledge that there really is a very fine line between pessimism and realism. And when you use mathematics and economics and logic to formulate arguments, even if they're not popular in terms of their appeal to the public, it either you embrace it and believe what you are reading, what you are witnessing, what you are hearing over and over again, and what you are seeing, or you don't. And it is heavy, and it can be a bummer, because you realize, as we were talking off air, Cliff High talking about $600 silver. And I said, yeah, I mean, look, you take the price of gold right now, you divide it by 7, which is the geologic ratio currently globally, it's $280. Well, how unrealistic is 6,000? I don't think it is. I think gold at 5,000 is not unrealistic. Divide by 7, you're not too far away from Cliff's number. And I think, but what does that environment look like? And one of the things to understand about one of the reasons that it doesn't look very good, and people have a hard time understanding that or acknowledging it or accepting it, is that I look at gold and silver as being the barometer. In other words, they're sitting on the ledge of the bathtub, and the water underneath it is the dollar market. When you pull the plug on the dollar or the bath water and the water falls, well, certainly gold and silver are getting higher and higher and higher in respect to the view from the water. In other words, it's not gold and silver that went higher, it's the dollar that goes lower. And the what that really means in a broader sense, that what does that mean for our standard of living? What does that mean for the markets? What does that mean for interest rates? What does that mean? And that is not something people want to hear. And in fact, I have, within my own extended family, I have these challenges where, I love some of the members of my extended family dearly, but I just won't go down the road. I have to tell myself, no matter what, to shut up and don't talk about it, because it leads to arguments where, you're such a pessimist. I want to be an optimist. I want my kids to grow up in a world that, had opportunities that we had, or have opportunities that we had. And why do you well, that's why it's so difficult. Number one, because you can't share this with many people. It's a noble endeavor to want to help people, help your family and your friends, but they end up thinking, well, God, maybe we shouldn't invite them back to the party next time, because all they do is they're buzzkill. They just cast a shadow upon our happiness with all of this talk of impending doom. And I think it's also important to understand that, to me, gold and silver are wealth, and they're not. I never accumulated them ever for impending doom. Yeah, they're great for impending doom because they are a alternative to the currency, to the system. I look at them as equal opportunity for when things do settle out, when there is a correction in the prevailing markets. What does liquidity in gold and silver offer you when all of these other traditional assets have corrected? So it's not just an emergency, it could be an opportunity. And it's also a wonderful way to pass money on to your children and to your grandchildren, or a niece or a nephew or a charity or what have you. It's been considered wealth for 5,000 years. And now look at what the states are doing. There's a handful of states out here who are realizing that, hey, you know what? There's a fine line between realism and pessimism. The dollar is getting its ass kicked, and the brain dead monetary policy of the Fed is destroying it and precipitating a future of uncertainty. So when you see states out there that are saying gold and silver coins minted by the United States, some of them are saying just that. And that's part of what we talked about offline, why I think it's getting so hard to find US minted products, because some of the laws in these states are saying any coin minted past or present by the United States Mint would be considered legal tender for all debts, public and private. Now, a few of the other states who are making this same law have altered it a bit to say any sovereign minted coin from the US or other major mint, sovereign government mint, would be eligible for as currency for all debts, public and private. There are states that are waking up to this, and I think you have to at some point. It's like an attorney that is representing you for a murder trial and only understanding your argument and not listening to the prosecution. I don't care what their argument is. I know what your defense is. Well, you have to understand both sides of the coin. And actually, there are three sides to every coin. You got the rim too, and there's just more to it than meets the eye in what we're talking about. And we get branded a certain way, and some of it we deserve, I guess. But I just want it to be known that I've done this for 33 years, and 30 of those years until really the pandemic, when everyone's life went tits up, completely and totally upside down. I never, ever, ever, ever spoke about gold and silver as this ultimate tool to protect you for when the sky falls. To me, it's been wealth. It's been wealth I hope I never need to use, that I can give to my children someday. But if I do need it, not just for an emergency, but an opportunity, maybe single digit price to earnings ratios on blue chip stocks while paying a 5 or 6 or 7% dividend the way they used to be. Or maybe it's the cabin I always wanted up in northern Minnesota on Gull Lake that's selling at 30 cents on the dollar because it's all been so inflated over the last 3 years. Whatever it is, it's not just for an emergency. It's opportunity, it's liquidity, it's wealth. It's a way to pass money on outside of probate. And you go back through all of time, Chris, and nobility and kings and queens and emperors and pharaohs, they all owned it as immutable wealth. And they didn't own it for emergencies. They owned it because it was wealth. And that's part of the rhetoric that has branded gold and silver something to be ignored. Not only do they suppress the price, they suppress and they darken the rhetoric, and they turn it into something that it should not be. But yeah, I understand what you mean by that. And it is something that sometimes is hard to deal with. But if you believe in it the way that you and I do, for the right reasons, the way that you and I do, then our job is to tell people what are those reasons and try to articulate them, and be very clear that this is not fear mongering. This is not selling something specifically because we're saying the wolf is coming, albeit I do think the wolf is coming. But I never accumulated gold and silver because the wolf was coming. And it wasn't until just the last 3 years, let's call it the last chapter, where I sensed the wolf was coming. So yes, it's good for that too. But if it doesn't happen, let's be glad and let's be thankful, and that the American spirit won out and our backs are against the wall and we fixed the problem. And well, what's the worst thing that happened? You own an asset that is depleted in nature. It's expanding in use cases industrially and monetarily across the globe, that has been viewed as wealth for 5,000 years. And in the end, will be viewed that way long after we're gone. So, I think it's narrow-minded thinking when you only look at gold and silver as this hedge against the apocalypse. And let's hope we never have to use it for that. But if we do, you should be damn glad you have it, because if you don't have something like that, you're screwed. So why not have the added insurance on top? It's like a death benefit on an annuity. When people buy annuities, they're not buying it for the death benefit. They're buying it for the income stream. But you know what? If something happens unexpectedly, well, that death benefit comes in handy. And that's kind of the same thing.
Yeah, well, a lot of good points you had in there. And one thing in particular that certainly I agree with in ways that I couldn't begin to imagine or see right now, I do think there is some way that we're built as mankind that we do solve problems. We do figure out how to continue going. I mean, during the Great Depression, during World Wars, life did continue on, and I fully expect that it will with however things shake out. I mean, seems on some level that there's some flaws with the current system as it is. So with that said, what initially drew me into this back again, my intro was in 2009. I started listening to Peter Schiff after the housing bubble collapsed, and I guess I couldn't have imagined things. And certainly, Peter had an extreme way of phrasing it, where perhaps I was a little naive, thinking it might happen sooner than later. Yet, what seemed clear was when you saw the response to the subprime bubble, which was more borrowing, more printing, and I guess we'll see in due time how that all shakes out. Yet, I mean, and that doesn't have to be, shooting each other in the streets or complete collapse of society. Yet, the numbers speak for themselves in terms of something that's unpayable, and not just here in the U.S., but we see that same trend around the globe. And
Well, that's what I mean. You're using mathematics, economics, and logic to formulate a decision. This is not just, you know, done willy-nilly. And you're a person who's very academic. You studied at the most prestigious business school in the United States. You spent time on Wall Street. You understand economics. You understand mathematics, critical thinking, and you were able to abstractly connect the dots. And there's nothing wrong with that. And if the message that comes with that is that times are going to change, well, so be it. I would rather be informed than blissfully ignorant. And because there is a responsibility with that. I get it, but I just think that I would much rather be informed than because people can't get out of the way what they don't see coming. They can't get out of the way of it. And I think this is something, if you don't see it, it's going to run you over very quickly. I think whatever happens, when it happens, much like the banking crisis happened here, it will happen so fast and it'll be over a weekend that people, if they haven't prepared, they're SOL. And I really do mean that. And I don't know that to be true, but it just seems that everything that ever happens in this industry or in this globalized world nowadays, as it affects the US negatively, happens when everyone's asleep on a Sunday night. And it's the same way that I spoke with the FBI once about wire fraud, and where you have literally legions of people in Africa and Eastern Europe and Mexico that are trying consistently and constantly to infect and get into people's email systems through phishing emails, and then play the long game and wait for an opportunity to find a wired transaction that is being made, and try to intercept the emails by putting rules inside the email server once they get in, and having them say, hey, we changed our wire address, send it here. And that happens a lot. And when that happens, 9 times out of 10, they said it's on a Friday afternoon, because by the time you realize it, everything's closed, you're screwed. You wake up to a new reality. The same thing is true here. I think that if they are going to make a change, that change could be OPEC. Hey, we've decided to no longer take dollars because all of us OPEC countries are on the Belt Road. OPEC, Saudi Arabia has joined the BRICS, the Shanghai Cooperation Organization. They've told the world they'll accept other currencies for oil in Davos. So when that happens, you better believe it's coming on a Sunday night, and we'll wake up Monday morning to a new reality. There will be no time to prepare. And that is the whole, that's what preparation is. You don't come home after paying your insurance premium and say, shit, my house didn't burn down. It's like, but if you come home unexpectedly to a burnt down house, you're damn glad you've made that last insurance payment. So that's just the nature of the game. And when you talk about insurance, insurance salesmen have to talk to you about your own mortality. No one wants to hear that, yet you still do it, and I think that's here true. This is your financial life. And if you don't do it, and something happens and you die financially and have no insurance to back it up, shame on you, I guess. You knew better if you're listening to this podcast right now.
Well, speaking of some of the things that people have been concerned about that led them into gold and silver, did have the news on Monday, or really over the weekend, but First Republic Bank taken over by JP Morgan. So finding out that concerns in the banking system still not done yet. And curious, so far to start the week, what has the response been like? You said things had slowed down somewhat following Silicon Valley Bank and Signature Bank. Curious what it's been like so far with the news of First Republic Bank coming out.
Well, it hasn't been as vicious as it has with the other banks because of the way they let this play out. And I wonder, why did JP Morgan and other banks give First Republic $30 billion a few weeks ago? And now why is JP Morgan buying them out? Is there something a little bit more systemic, perhaps, in First Republic that we don't know about? And I think that's probably the case. And one of the things that I think if people really understood that they may be a little bit more freaked out is that at the end of 2022, the FDIC had a little over $128 billion in their cash, and most of it in government securities. The Fed loaned the FDIC $173 billion in the last few weeks, $173 billion. So think about that. The Fed is borrowing money to the FDIC. Is there a problem there? Hello, anyone see a problem with that? In other words, the actual cash needs of SVB and Signature Bank alone, those failures would have more than exhausted the FDIC insurance fund. And the Fed has to loan $173 billion to the FDIC. Why is no one talking about that? Does that sound like damage control? It sure does to me. Or how about the fact that there is $153 billion at the discount window, 70 some billion added last week. And the discount window is this is a program where the loans that are made to the banks are very unfavorable, and they have a much easier path to raising capital from depositors. But if depositors are yanking money out, now these terms, they have to post at par collateral that they held since early March, because they can't go and buy treasuries and post them as collateral now at these higher rates. So they have to have on par collateral that they had accumulated over a month ago. And they're paying like 4.75% to the Fed to borrow this money. And it's like, we need money right now type of deal. And we don't care how much we have to pay. Well, why is that happening? Because people are yanking their money out of these banks. And if you see that kind of action where you're seeing the money or the numbers at the discount window go way up, this is a big deal. It's a very, very big deal. I think it's 153 billion. It was 148 billion last week, but they're paying 4.75%. And, they wouldn't borrow at this rate if they could avoid it. And they better pay those back quickly. They're only doing it because if they don't borrow that money from the discount window, they're forced to sell their securities to meet redemptions that have all been cut in half or more. And then there's another banking crisis. But the fact that this isn't being talked about by the mainstream it's damage control. It's keeping the public in the dark, but it tells you just how shaky the entire banking system is. And I think it's something that we haven't even begun to see the end of it yet. But the way they did this, with JP Morgan coming in quietly doing it, and you don't hear the words FDIC in there. And even though I'm sure they had, the FDIC is behind all of this and guaranteeing things. But what does it really mean when they have to have loans from the Fed? And what does it say about the safety of the system as a whole that encompasses 18 trillion in deposits? Take out the commercial banks. What do you got? 9 trillion or more in regional banks that is being backed by 128 billion that's already been exhausted in a $174 billion loan by the Fed. I'm telling you, it's just a house of cards. And it's the ignorance or the lack of any due diligence, if you will, into this area that the public, I think, is not more scared by this as I think they should be.
Well, I hear you. And speaking of things that are a little ominous, I mean, there we have Janet Yellen with a dangerous look on her face saying the U.S. could hit the debt ceiling by June 1st, much sooner than expected. Well, that's just about a month away. And gee, you would think eventually the thing gets raised and they avoid perhaps the purpose of the debt ceiling limit, which yet still at this particular time with perhaps a bit more divisiveness. I know we've always had a divisive political system, but possibly hitting new record levels on that. Any thoughts on the debt ceiling that is?
Yeah, I mean, and for those of you that out there that didn't hear when I probably mentioned this on your show a while back, Janet Yellen last time told the world that there would need to be great measures taken to raise the debt ceiling. And it really, I had to dig and dig and dig and dig to find it. I finally found it on a Yahoo Finance article. What was those great measures? What were they? And she borrowed money from the Postal Service's retirement fund, the Disabled Veterans Retirement Fund, and the Civil Servants Retirement Fund to raise the debt ceiling. And what made me particularly nauseous that day was the next article said, and by the way, we just voted to give another $5 billion to the Ukraine. And so, including pensions to their government employees when there's a $1.75 trillion pension shortfall in this country, where 5 billion, another 5 billion on top of the 120 we've already given them is okay, but 5 billion to build a border wall and protect our kids from dying of fentanyl poisoning and millions of people entering this country the wrong way is not okay. And that it's just that the moves that our politicians are making, our current administration or the Federal Reserve, or in this case the Treasury, are, they're just misaligned with the way that I would do things. But what does it mean to raise the debt ceiling? Why even have a debt ceiling at this point? All it does is draw attention to the mismanagement of the world reserve currency. And, it's like someone addicted to spending and you maxed out your black card. Well, just go get another Visa card, and you max that out, go get another Discover card. At what point does it just become absurd? It already has, in my opinion. But yeah, they'll raise the debt ceiling because they always say how awful it would be for the United States to go back on its obligations. But I mean, we're insolvent. The balance sheet came out 3 weeks ago and said Social Security alone is 77 trillion underfunded. Medicare, Medicaid, government military pensions, that and Social Security off balance sheet items are almost 130 trillion by themselves, and on top of a $31 trillion debt. So what does all of this mean? This is what I mean about why you and I do what we do. There's the mathematics of it. A trillion seconds ago was 31,688 years ago. There's the reality of it. How does it play out? I don't know. Am I being pessimistic or am I being realistic? Or is there a freaking fine line right down the middle of that statement? I don't know. You all tell me what you think. I think it's real, and I think it's absurd. And imagine that this was your own home and you're dealing with your husband or your wife, and they keep breaching your own debt ceiling, but we're going to raise it because it's okay. And they breach it again a few months later. We're going to raise it because it's okay. At what point does it just become unsustainable, or have we already crossed that Rubicon a long time ago? These are, to the very first point you brought up in this interview, these are the reasons that I have such strong feelings about owning precious metals, because we're being led down a road that has very few, if any, ways back. And it's either inflation or default, one or the other. And either roads, in my opinion, the only way back is paved with gold and silver. And I say that with 100% sincerity. And I would take that to the grave with me as being something that I believe in my soul.
Well, I hear you. And in terms of gold and silver, I wanted to get an update on the premiums, how things have progressed over the last week before we do have another viewer question that came in. But any changes on the premiums over the past
They've
week?
elevated slightly, not as much as I would think. And the availability is slightly better than I would think. And I don't know if this is residual from stuff that we've bought over the last several weeks and or months or not. But one of the things that I am happy about and somewhat surprised is, even though the premiums have gone up from their roughly January or February lows to much higher, but they are not accelerating the way that I would have anticipated via the last 3 weeks. And one of the things that's very interesting, I guess it's almost a thought experiment in psychology, is in this country, people have such short-term memory. Their memory is very short, and they've already forgotten about Silicon Valley Bank and Signature Bank and the way that this was papered over by JP Morgan, and it was done so without all of the fanfare that we saw with the others and the hyperbole and the fear, where the Fed had to come in and do things. Well, now instead, the Fed is just quietly borrowing money to FDIC instead, and no one's talking about that. So, people are still thinking that everything is okay. But again, when you see the discount window getting more and more and more attention at 4.75% lending costs to the institutions having to post equal collateral at par, that's very ominous. And I guess we'll have to see how it plays out. But I honestly do believe that this is something that is intended, that they are trying to squeeze the regional banks. And if the ultimate game is to issue a central bank digital currency, it becomes much more efficient and much easier if you can shotgun it into 5 commercial banks rather than into 5,000 regional banks and 5 commercial banks. So I think that there's a good part of me that believes this is the playbook, and there will be more intended specifically to wake people up to the safety of the commercial banks and their huge derivative books that Janet said, well, because they're so systemically tied together, we can't let those fail. But at what point does the Fed, who's also insolvent based upon their balance sheet, which is upside down right now, $30-40 billion upside down, at what point are they just rendered impotent as well? Or do they just think they can print their way out of any problem? And what does that do to the dollar and the world reserve status, which is already teetering, what I've been talking about for 3 years? So you have more variables than just what the Fed can do. You have the rest of the world that is, who is thinking that, dollars are a stupid place to put your money. And you have, as an example, the president of Brazil, Lula da Silva, saying, every night I ask myself why all countries have to base their trade on the dollar. I mean, this is the kind of rhetoric that we're seeing even from our allies. And this is the problem that we find ourselves in. Too many people focus on this stuff and only look at it right here through a singular perspective. But there's a lot of other stuff over here that is going to have a direct consequence to whatever happens here. And I think that's part of the problem that a lot of the commentators are ignoring. And you have to have a more holistic macro view on this. And the micro view sucks as it is. I mean, it's bad. But when you add the macro and the countries that are moving against the sanctions, the hegemony, the hypocrisy, and the mismanagement of the system, laughing at the way that we are doing things in this country, from the electoral process, or interference with Trump being, indicted rather for things that he should never been indicted for, especially a sitting president, all the way to what we're doing with the debt ceiling, what we're doing with everything. It's just making the whole world say, hey, how much do we want to accept of this nonsense? And if it came down to the fact that the Fed has to bail all these institutions out and backstop 18 trillion in banks because already FDIC is neutered, it's got no money, at what point does the rest of the world say, and pardon my French, fuck off? At what point do they say that? And they will. And I think that's the one thing that a lot of the commentators are missing. And this is much bigger than just what Janet or what what's his name, Powell, will or will not do.
Well, I hear you. It's quite a situation out there, and we will continue to watch as these things progress forward. Tough to watch at times, as we talked about earlier. But on the positive side, we did have a question from one of our loyal viewers come in. He purchased some of these standing Liberty quarters that we see here and was wondering whether he would be well suited to trade these in for some Washington quarters. curious if you had any thoughts on that one or any general comments on the product here.
Yeah, those, I mean, I like those quarters. I don't think those were purchased from us, but they're hard to come by. Those are 100 and as much as 150 years old. And, you know, when you have coins like that that have gone through 150 years of being handled, many years going through coin counting machines and used in commerce for a very long time, you find them in that condition. The very last one there on the right on the bottom, that's, I mean, that's is what you would expect to see in a lot of those coins. It's called a cull, where yep, that one where you can't see the high points, you can't see the dates. Some of them are better than others. I mean, if you can see the date on them, they're traditionally, or you know, they'll be more accepted. They're about 50 cents an ounce more than the Washington quarters. I love the older quarters because of the mystique that they offer. So, I mean, when I look at those, honestly, I mean, I see one just in that deal there that I would say that last one is the only one that to me looks really bad. What does someone expect when they get a quarter from 1890? You know, I mean, what's it going to look like? And so that top one there, 1896, it looks like. So there you go. I mean, you're talking what, 100 and almost 130 years old on that top quarter. It looks pretty damn good to me. If you can see the date, yes. But on that last one where you can't read the lettering or the numbering or see any of the features on her face or whatnot, I would consider it. It's not imperative, but I understand what he's saying.
All righty. Well, I appreciate that. Now he'll be happy to hear the answer to that. And just as we wrap up, I hear the silver special is back this week.
Yeah, and we have a nice batch of 2023 silver kangaroos that just landed in our warehouse today at $4.85 over the price of silver delivered. Actually, I take that back. If you buy 100 ounces or more, it's free shipping. Anything under that's $15 shipping. $4.85 over, and should be as good of a price as anywhere in the United States. But here again, you know, these are elevated premiums from where they were a few weeks ago, not where they were a few months ago. I guess we'll have to see how everything plays out to see if the premiums stay at these levels. And, you know, even these 485 premiums, they can go up. I know I'm quoting it at 485, but when premiums go up, what basically happens is the demand starts to overwhelm the industry. And when the dealers call the Perth Mint distribution person or the importer from the Perth Mint or call the mint directly, they'll say, well, it's going to cost you more this time. So that's why premiums rise. And they're very fluid, but I'm encouraged that they haven't gone up to a level that I thought they would have via the demand we saw for 3 straight weeks. So still a good price. They are in stock. They'll ship very quickly. We've caught up in terms of the deluge of shipping orders that we had. But yeah, it's the first time I've offered a special since the Silicon Valley Bank failure, because it was so off the hook that we couldn't keep anything in stock. So they're in stock. They're a good price. They're the purest silver coin in the world. Those in the Canadian Maple Leafs, they're 4 9s, 9999 pure. They come in mini mint boxes of 250, whereas all the other 5 major sovereign mints, US, Canada, Austria, South Africa, UK, come in mint boxes of 500 coins. And so from a standpoint of logistics, moving them around and whatnot, they're much easier to move around. And tubes of 25, they're one of my favorite choices. And when you put it in comparison to a US Silver Eagle, you're buying them for basically $11 less than a Silver Eagle. I mean, it's insanity what's going on with the US Eagle. Most of my career, the last 30 years, you take out of the equation the last 3, the first 30 years of my career, they would have been 50 cents different, not $11 plus different. So something's going on with the US Mint. And I wondered, as I said to you off air, that I wonder if it is the fact that several of these states are saying US coins. Now, several of the other ones are saying any sovereign mint, but some of them say US coins will be used as legal tender in these states. And I just wonder if it's the people who are crafting these laws, who understand what's going, and everyone who's read them, running to buy US mint product, whether it be the junk silver, which is trading at 10, $11 over the price of silver. That's just insanity. Or the silver eagles. The gold eagles and gold buffaloes are not out in left field like the rest of this stuff is. The 1/10 ounce eagle, which you could use in barter, is. So I have a feeling that that is adding fuel to the fire from a mint that has been completely inefficient for 3 years. Now you have demand coming from a whole subsection of people that may never have thought of buying US minted coins. So this is why when I talk about a special, yeah, I could special silver eagles at 16.5 bucks over spot, or these at 485. And for my money, this is a much better buy.
Well, appreciate that. And if people are interested in the kangaroos or just have questions in general about anything that we talk about on the show or in the markets or any other products, you can find out at Arcadia at milesfranklin.com. And
Yes, sir.
maybe we will wrap up for this week, but good stuff as always. Fun to catch up, and
Love you, buddy. Thanks.
some time.
Yeah, you stay well and give a hug to the silver babe for me, and I'll look forward to catching up with you again next week. And until then, you stay well.
Will do, my friend. You too. Well, thank you, Andy. Great to get his update on the physical silver market as always, and also dig into some other topics. Hopefully you found that helpful in terms of just handling some of the different things that go on in following the silver world, some of the developments, which can get heavy on a day-to-day basis, but perhaps is an important part, almost equally important in terms of following these markets, following the silver market. So hope you found that helpful. And before we wrap up, would like to thank BlackRock Silver, who brought us today's episode. BlackRock Silver, as you may know, released their maiden resource estimate back last year in 2022, where they had 42.6 million ounces of silver equivalent. And in the time since then, they have been expanding that resource base, including some recent drill results that came out from late 2022 that showed 399 grams per ton silver equivalent over 4.36 meters and 712 grams per ton silver equivalent over 1.5 meters. That was in this drill hole TXC 22-74, which you see here in the green circle. Again, showing how they have been expanding and have this whole area up to the northwest that they are continuing to explore as they attempt to find additional silver and gold mineralization. So you can find out more about BlackRock at blackrocksilver.com. And also just by clicking on this video coming your way now from a call I did recently with Andrew Pollard, where he describes some more of the details. And to find out more about what they're doing, here is Andrew Pollard.